Filing taxes for a small business in Canada involves several steps, depending on the business structure, sole proprietorship, partnership, or corporation. Here's a general outline of how small businesses typically file taxes in Canada. The first step is to determine your business structure. The following business structures have different filing obligations. Sole proprietorship. If you are the sole owner of the business, you will report your business income and expenses on your personal income tax return. T1. Partnership. If you have a business partnership, you will file an information return, T5043, for the partnership, and each partner will report their share of income on their personal tax returns. Corporation. If your business is incorporated, you must file a corporate tax return, T2, and the corporation is taxed separately from the owners. Any dividends or salary paid to owners, shareholders, will need to be reported on their personal tax returns. Next, you need to register for a business number, USBN. All businesses must obtain a business number from the Canada Revenue Agency if they plan to collect the goods and services tax, harmonized sales tax, or have employees. You can get your BN by registering online with the CRA. You need to make sure to keep track of your income and expenses. Income. You need to track all sources of income, including sales, services, or any other revenue. Expenses. Keep records of all business expenses such as rent, utilities, supplies, and wages. These can be deducted from your taxable income. Also, make sure that you are aware of GST/HST requirements. If your business earns over $30,000 annually, you must register for and collect GST/HST from customers. You must remit the collected tax to the CRA. For small businesses, you can report GST/HST on a quarterly, annual, or monthly basis, depending on your revenue. Incorporated businesses have to file a T2. If you operate a corporation, you will file a T2 corporate income tax return. The tax rate depends on the corporation's income and whether it's eligible for small business deductions. Corporations must file their T2 returns 6 months after the end of their fiscal year. T1 returns are for sole proprietors and partnerships. Sole proprietors and partnerships must report business income on their personal tax returns, which is a T1 for sole proprietors and T5013 for partnerships. Sole proprietors use Form T2125, Statement of Business or Professional Activities, to report their business income and expenses. Partnerships must file a T5013 information return, but each partner must include their share of the partnership's income on their personal return. In some cases, you will need to make installment payments. If your business owes more than $3,000 in taxes in any given year, you may need to make quarterly installment payments to the CRA. These payments are typically due in March, June, September, and December. If you have employees, you must withhold and remit payroll deductions, such as income tax, CPP, EI, etc. to the CRA. You need to file T4 slips for each employee and submit a T4 summary annually. Employers must also file remittance forms, PD7A, for any amounts owed to the CRA from payroll deductions. Small business owners often find it helpful to hire an accountant or use specialized tax software to ensure that all tax obligations are met and to maximize deductions. Here are the deadlines for different filing deadlines. Sole proprietors partnerships. Your personal tax return, T1, is due on April 30th for the previous tax year. Corporations. The corporate tax return, T2, is due within 6 months of the end of the fiscal year of the corporation. Overall, filing taxes for a small business in Canada can seem complex, but by staying organized and understanding your business structure and tax obligations, you can ensure that you file on time and meet all requirements. You might also consider consulting a tax professional to help you navigate specific tax issues or maximize your deductions.